Hello there, this is James and you're watching Tixee Live, and a very good afternoon to all of you, and all of you a very happy Friday. In today's program, I want to discuss the worst performing stock in the market at this very moment in time, plus a couple of little developments which has happened during the European session, and discuss what a shattering month we've had in the markets. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are risks at hand before entering any trade. With that out of the way, let's get started. So what's some latest developments? I mean, this month has been record-breaking. It's been absolutely record-breaking month, but all the wrong records. And we have a new record today. And it just seems that we're having records broken all the time. And like I say, they're the wrong types of records to be broken. EU CPI was announced an astonishing 10% versus 9.7% expected. Okay, expected 10%, double digits. Just yesterday, don't forget, Germany announced its inflation rate at 10.9%. So this is really, really staggering. Okay, but now obviously all eyes are going to be on the ECB next month, or very soon, because we're about to enter October. But like I say, the market's pricing in a 75 basis point rate hike. Will they be more aggressive on the back that they're now in double digits? That is the question. For now, as it stands, the euro is under a little bit of pressure, not as bad as it was at the beginning of the week. Currently trading at 0.9766. But like I said, we'll have a look at the market again in a bit. The cable, the sterling. What a week that currency has had. What a week it has had. It has bounced on better than expected GDP. Don't forget the GDP was announced this morning at plus 0.2% versus the expectation of negative 0.1%. However, it did was sort of branching forward around the 112 handle, but then on the sort of hope that maybe, just maybe, Truss and her UK government might do a bit of a U-turn on these tax breaks. Well, she met with several bankers and other leading watchdogs today, and there is no turnaround on this. So this is why it's bounced a little better. It's currently trading at the moment 1.11, so 111 handle, but it's really still capped because of, like I say, there was hope that she might do a turnaround. But anyway, the big story dominating the US session at the moment is Nike. Nike share price is plunged around about 10 to 12%. It actually plunged to 10% in pre-market trading. The US session is now open. It's now actually struggling negative 12%. And the reason for this, and this brings me on to something I want to have a brief chat to you about. Nike revealed that their inventory, the amount of produce they've got in their warehouses, is 9.66 billion. The expectation of the total value of their inventory was 6.91 billion. That's actually 44% higher. So basically what that means is they've got so much stock because people aren't buying. People aren't buying, which is gently hinting at, we are actually, consumer behavior is changing. And obviously because of the current economic climate in which we live in, people aren't spending their money so much. So this has really, really put Nike under a lot of pressure, and we'll bring that up in a minute, in a moment. But like I say, this is a worrying sign. Okay, their inventories. Don't forget, we've already had reports or last a couple of months back of Costco having massive inventories. So Nike having 44% higher in their inventory than was anticipated is pretty scary numbers. Don't forget, just yesterday, or actually 2 days ago, Apple announced that they told their suppliers to stop producing new iPhone 14s because demand for their new flagship iPhone 14 was not there, or was not as much as they had hoped or anticipated. Again, this is Apple. Their flagship iPhones always sell. It's obviously still selling, but it's not selling as much as they had hoped. So then that's another worrying sign. The other thing is, and I mentioned this briefly this morning in my morning's video, that Facebook obviously is looking to downsize its workforce and freeze all hiring. And it's the first time they've ever done it since they've existed. And this is the thing. Amazon as well is closing one and keeping only one out of all their call centers open as well. So again, this is the worrying. But there is a list of companies who are expected to reduce their workforce in the coming months. This is only some of them. Obviously, Facebook, like I mentioned, Alphabet, Google, Microsoft, Tesla, Snap, Nvidia, Amazon. These are just only some of the companies who are expecting to downgrade their workforce. So again, it's worrying signs about this labor market. It's beginning, like I said this morning, I really believe it's beginning to show cracks. But anyway, let's have a quick look at the market as it stands. Let's have a quick look at let's start off with Nike, actually, because Nike has opened with understandably, a massive gap on that really worrying inventory number. Okay, yeah, like I say, it closed the market around $94.80, and it opened under $83.60. So a lot of pressure on Nike. And like I say, this is more to come, especially as we've got something building up for October coming really soon. I'll talk about that again in a moment. Let's have a look at the euro, like we discussed as well. Like I say, favoring slightly better on the day. If you look at it on a daily, we can see slightly better on the day. Currently trading at 0.9767, but needs to break that key area of interest, which I'd be looking at 0.9870 for us to get any bullish momentum. After that, it's then 1.00577. But with that shocking CPI number, I'm really pretty much sure for now, though it's had a better day, slightly better day today. It's actually down on the day, on the intraday. But like I say, it still remains under pressure. The cable has had a slightly higher day as well. Remember, I put that area of interest based on the pivot point, daily pivot point at 1.11237. Well, it couldn't break that level. It tried to rise above it and get to that sort of point, that level at some point today, but it was unable to break it, and it held, as you can clearly see here on the 30-minute chart. Certainly having a better day than it has done over the last couple of days, but mainly because that GDP number was better than anticipated. But really, the cable is not out of the woods yet. I'm expecting further pressure on the sterling in the medium to long-term future. Gold as well has having a slightly better day today. It's actually just trading above that really good level now of $1,667. Currently trading at 1,672. Next area of interest, if we can keep this bullish momentum, would be $1,694. Right, other things we want to talk about. S&P. S&P is set to close the month with losses once again. And what's worrying, what's really worrying, obviously, is that this is the 7th month out of 9 months of losses. So over the last 9 months, S&P has had a losing month. 7 out of 9. Okay, he's managed to recover slightly at the moment. Okay, he's currently trading slightly 0.10%, slightly in the green. Higher tech as well, slightly higher, 0.17%. And Dow Jones currently trading negative 0.06%. Okay, so they haven't had, they had a terrible day yesterday. They've had a slightly better day today, which which is understandable, which usually happens when you have carnage hit the market. So the market catches its breath and you see a little bit of dip buying. But yeah, they've not had a good month at all. 7 out of 9 losing months is set to close the month out with. But here's the thing. The month's coming to a close. I want to talk about this month in a minute because it's been a shattering month. But here's the thing. October is coming. And what does October bring? It's Halloween. But what's even more scarier is earnings season. We're about to get earnings season, actually, this in October. It's the beginning of earnings season. And that can be, that is anticipated not to be. I mean, the last earnings season we had was not great, but not awful. It wasn't awful. This one, though, there's a lot of anticipation that this earnings season is really going to show an economy beginning to slow down. So that's going to be a really, really big event, big events over the next couple of weeks. Okay, I think the real big one starts on the 14th, which I think it would be JP Morgan or Goldman Sachs with their earnings. So that's going to be really, really put the cat amongst the pigeon. Don't forget, Michael Wilson, who's the chief analyst at JP Morgan, he says the earnings season could be the straw which breaks the camel's back for the market. So we could expect a little bit of more doom and gloom to come, but plenty at the same time of volatility, obviously. But anyway, that's next month. But what a month we've had this month. My. What a month we've had. I'm absolutely shattered, but I'm also loving it. I'm also running on adrenaline. Let's start off from the month from the very beginning. At the beginning, we did say at the very beginning of the month that September is the worst month for stocks on record. And of course, September has kept to its word, and it's been a very bad month for stocks, as I've already mentioned. Very bad month for stocks. Then we had the UK's new Prime Minister come in. And boy, didn't she make an impact on the market? Didn't she just? So Truss was elected as the UK new Prime Minister, and she came in. The yen is was set to have its worst year yet. Is still very much under pressure, of course, as well. Then, what else did we have? We had more warnings about energy crisis, more pipelines being shut down to Europe, really underlining that Europe is not going to get any gas from Russia this winter. ECB finally gets up and raises interest rates by 75 basic points. Then we had some very, very sad news, obviously, this month, where Her Majesty the Queen passed away. So we had that as well. Then we had inflation week. US CPI, real market mover. It was expected to come in at 8.1%. It came in higher, showing that the Fed has not made any difference yet, at 8.4% or 8.3%. Markets went nuts. We had pure dollar strength and a sell-off in the stock market. Then, and actually we had the worst day for stocks since 2020 on the back of that CPI reading. Then what do we have? The Fed, they increased interest rates by 75 basic points. That's the third rate hike of 75 basic points in a row by the Fed. Bank of England's turn, and they raised it by what I now consider, I never thought I would be saying this, what I now consider a very dovish rate hike of 50 basic points. Then we said the yen was having the worst year ever. Bank of Japan finally intervened in the FX market and actually gave a bit, bought in the yen, which put pressure on the dollar yen, but only for a short period of time, because it was trading at 145 and then crashed to 140. The dollar is back up again. It's now currently trading at 144.56. So will we see more Bank of Japan intervention again? Euro collapsed to a 20-year low, as we already looked. It's way under parity now. A new 20-year low, shall I say. Like I say, we've already looked at it. It is still very much under pressure. And then, like I said earlier on, a certain individual, a new PM, has certainly made an impact already. And she hasn't been in the job in the job yet for even a month. The new mini budget was announced in the UK, and the market lost its mind. The sterling, British pound, US dollar dropped to the lowest level ever. ever. Not 20-year low, 30-year low, lowest level ever. It's now, of course, obviously we looked at it, it's recovered slightly at the moment, but still there's a lot of pressure on that. And really, like I say, it spooked the market massively. Why? Because how is the UK going to afford all those tax cuts and support all those households with the energy bill? So yeah, not good, not good. And because of that, the bond market, boom, exploded, and the Bank of England had to wade in and step in to protect it. They intervened. So 2 banks intervened so far, intervened in September. And finally, like I said, we've had that shocking CPI for the Eurozone, 10%, double digits CPI. So what a month. That's a lot of things to happen this month. A lot of volatility. I thank everybody who's joined me and watched me with these videos covering these events so far in September. But here's the thing. I already mentioned we've got a brand new month ahead of us. October potentially is going to be huge because obviously we've got the earnings season, but it starts next week. It starts next week. We have US ISM manufacturing, Reserve Bank of Australia interest rate decision, US ADP, US ISM services, EU retail sales, German retail sales, US unemployment rate, and of course, US non-farm payroll. I will be doing a watch along about that because, like I've already said, I'm looking at these small cracks in the labor market. I'm beginning to see some little small fractures. What will the NFP show us? What will the NFP show us next Friday? So please go and join me for that. European markets, as they currently stand, FTSE currently trading slightly in the green, 0.20%. DAX currently trading in the green, 1.04% up. And Euro Stock 50 currently trading as in the green at 0.92% up. So yeah, don't forget, you can ask me questions whenever you want, but what an exhausting month. But what an amazing month. What an incredibly volatile month. We've seen, like I said, we've seen so many records broken, but all the wrong records broken this month. It's been really something. Been really, really something. Yeah. And so tell me what you think. What do you think of this month? What do you think October will bring us? Do you think October is going to bring us just as much or even more volatility? Do you think October is going to be even more exciting? So I'm just got to see if it's any good. That's okay. So yeah. So, let me know what you think. Not a problem. If you think of a question later, you can put it in the comments section, either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which of course will be Monday, the first trading day of October. I'll be online again at 8:30 a.m. UTC, so please join me that. And again, of course, on Monday, later that day at 2 p.m. UTC to cover the US session. So anyway, if there is no questions, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you've put up with me, whatever top enthusiasm for the markets, which I simply cannot help because I love the markets, and give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.